prices continue to drop. It's just looking ahead. I don't know why farmers are going to want to plant the minimum amount of soybeans.
Hi, everybody. I'm Marlon Bowling with you. It's a pleasure to have you with us here on the Comstock channel. We're going to be taking a look at the market conditions here as we get closer to the middle of the week. And we're also going to get a report directly from Brazil, from our president of Comstock. It's Matthew Cruz. Time for our weekly update on Brazilian crop conditions there. Matthew is there on the ground. And this week, Matthew, as you look at conditions, it seems like the market is starting to head south, thinking that the crop conditions look pretty good. Did you want to take a look at the weather outlooks first, or do you want to give me a narrative first? What do you think?
Well, maybe give you a narrative. I don't know that it's coming as any great surprise. I was starting to write in our Comstock report explaining what I saw over the weekend, that we had our annual Christmas party on the farm. We have about 200 people come to the farm with staff and family and everything. And, I realize it's a relatively small sliver of the overall soybean area, but I gotta say it was some of the best looking soybeans I've ever seen at this stage. For as many years as I can remember. Like it was lush green. It was just tabletop flat, extremely uniform crop. Last year at this time in this particular area, it was pretty dry and the crops looked rough, but they still came back as the rain picked up. But they're and the crops still perform well. And this year they're way ahead in terms of development, and it's just looking great. And I think that's more or less a situation for the greater part of Brazil's grain belt. If you look at that weather map that kind of talking about there, I mean, it's basically, this is showing here for the next week, almost up to Christmas Eve, I think, basically showing again continued rainfall through at least the northern part, the primary part of the growing regions, 3 inches or more in a lot of areas, pretty much encompassing all of Mato Grosso, Goiás, Minas Gerais, Mato Grosso do Sul, those places. The only place where it's maybe little sparse is in that very southern part of Rio Grande do Sul, but that's been well watered up until this point, so it's not necessarily a bad thing there. It's not immediately going to start hurting, but you move on into the future. Again, another map there. I mean, this takes us a forecast out until the end of January, and this is where we're at. We're at a critical stage here where we're coming in towards, there's another 4 to 6 weeks left of critical growing season here in Brazil. And that's what the market is weighing on, that, oh boy, here we're almost halfway through that. And the forecast still looks pretty favorable. And so that's, it's a futures market, right? It's forward looking, and it's looking out ahead and saying, this is looking good for favorable for larger bean crop, whatever. And so, yeah, you can kind of see here in that green and bluish hues there, it pretty much encompasses the entire northern tier of Brazil's growing regions into Paraguay, showing adequate rainfall. And so there's actually, I even saw a video on social media of a farm already harvesting soybeans in Mato Grosso. Now it's an isolated incident where they planted short season varieties in early September, as soon as they were allowed to plant. But the bulk of the harvest is going to start here in late January, early February for Brazil. And you'll start seeing reports pick up here in Mato Grosso of harvest starting in January already. And so you still got a ways to go, but you're getting over the hump, and you're starting to see the harvest approaching fairly soon. If this was in Iowa, this would probably be, late July, coming up on August 1st with a good forecast. And so that's basically what the market is looking at.
Are the soybeans mainly in the flowering stage, or are they putting pods on now, or what?
I think for the earlier planted ones, they already have their pods set in their pods. But yeah, for the most part, most of it's all in its flowering stage.
Well, let's take a look at production then, if that's the case. Here is a chart that you have put together for me here. And boy, if that's true, and if the weather forecast holds up, I guess it's no wonder that the soybean market is really floundering right now.
Yeah, you can see. You look where we've come. I mean, the trend line is obviously pretty clear. That you go back 20 years ago, um, we're looking at 400% growth in soybean production in Brazil in the last 20 years, and right now that 169 million U.S. tons for this season. That's what the USDA has us pegged at, and there's already chatter starting among private estimates that there could be a 2% yield bump. So if Brazil's overall yield estimate is at 52 bushels per acre, and so if you add just 1 bushel per acre, take it to 53 bushels per acre, that takes you up to that 172.3 million metric tons. And as long as things continue this way, I would say that's possible. Maybe it's a little early yet, but certainly if you get to late January and the weather has been positive, they're probably gonna look to increase that rather than decrease it or maintain.
One thing I wanted to ask you about was the currency, the valuation between Brazil's currency and also the American dollar, and that's kind of related to the respective inflation levels in each of the countries, isn't it? I see you have a graph here from Bloomberg about Brazil's inflation rate. So can you explain this one for us?
Yeah, I mean, Brazil has a history of struggling with inflation.
Mm-hmm.
It's come down in recently, but it's not coming down as much as they'd like. I think it's hovering close to that 4 to 5%. There's good and bad to that, right? That their unemployment levels are at record lows, which is a good thing. I think we'd all agree with. But the downside is that there's more spending, consumer spending. Everybody has jobs, they're making money, and that tends to lead to higher inflation. And so the problem with that is their currency is continuing to weaken. I think it's probably the worst performing currency in the world, or one of the worst ones for 2024 as we come to a conclusion here for the year. I want to say when I last calculated, it was like down 26% for the year. And this week it just made a new low. The government is, trying to actively stop that from weakening more. They just increased interest rates another percent. Their SELIC rate was what they refer to as kind of their LIBOR rate is like 12.5 to 14%, somewhere in there. And so most of the operating loans for farmers this year have already been locked in. But if nothing changes, I mean, they could be looking at 15% operating notes for next year. And so it's a big cost, but for the time being, it's probably a good thing for the farmers because the weaker the currency is, the more reals they get per dollar. And since soybeans are a dollarized global commodity, their basis levels have improved, their local bids have improved to the point that they're getting more for soybeans right now. And I think we've talked before how it's like 40% off of its annual low. And so it's maybe not a great price, but it's back to where they're above water and they can make money. And so, but there's good and bad to it. The interest rates go up, input costs go up, but for the time being, their local bids are going up too.
One thing about it in today's trade on Tuesday, I was looking at the chart for March soybeans, and they've been in kind of a wedge pattern. I guess you could call it a declining wedge pattern maybe, but the base of that gave way today. They broke out the bottom side of that. And I would imagine that probably maybe brought in some long liquidation or maybe a little bit of additional selling into the market here when that gave way. Is that a sign of things to come? How do you look at that now?
Oh, yeah, it's just a sign of more continued weakness. And, the market is struggling to find anything to grasp onto to turn it around. Yesterday we had the national soybean crush came out report for November, and it wasn't the most bullish report, but it was still like the second highest crush I think for November of all time, and so it was pretty decent. And the market started the day higher, and then once that report came out, just went right back to trading weather in South America, and the price collapsed. And so it's looking for anything. It's grasping at straws, is how I'd maybe describe it. It's looking for anything to turn it around. You need to feed the bull on a regular basis, and it's not happening. And it's just all the chatter about the weather in Brazil just continues to take over. And so yeah, we've been, I think in the January contract, we've been hovering around those lows, those 975 or something like that. I don't have it in front of me, for like 5 months. We were at these levels back in August. We've been hovering around these levels, and today in the March contract we just broke below it, and so that's not a good sign. That it would indicate that we're going to probably move lower, here in the near future.
And new crop November of 2025 beans were down below 990 now.
Yeah, it's not good. I need probably at least $10 cash to break even or make money on my farm in Iowa. And so, I sold a little bit ahead, which was good, but if prices continue to drop, it's just looking ahead. I don't know why farmers are going to want to plant the minimum amount of soybeans, which is just going to concede more acreage to Brazil, to be honest. So it's not good.
Relatively speaking, corn has been holding together fairly well in the face of all this, relative to the soybeans. Give me an update on the corn production there in South America from what you have heard. Anything?
Yeah, I mean, all things considered, the corn market is doing pretty well. Its fundamentals are strong. It's just getting weighed down by the soybean market, I think. I think you're having a little technical pullback, but as long as the soybean market doesn't fall apart, corn still has a chance here. But it's still early for the corn market here in Brazil to have much of an impact on the CBOT. They've CONAB reduced the Brazil's first corn production area slightly in their December CONAB report, but not too much. Most of the Brazil's crop comes from that second crop of corn, and nearly 80% of it, and that doesn't get started planting until January for the most part. And most of it probably goes in February. And so it's still pretty early. But as long as, the soybean crop gets out quick and the corn crop gets in, the market will look at that as being a favorable thing, getting the crop in on time. And so, that's probably at least a month away before the market kind of shifts its focus away from soybeans and looks more at the corn market.
Well, I know you've been down there spending time with family and comparing notes about how things are going in the southern hemisphere there. I would imagine you're probably going to be celebrating Christmas with the family in that part of the world there. Is it much different than celebrating up here?
Well, it's 80 degrees and there's no snow, so that part of it is very odd to me. But no, other than that, I mean, they have Santa Claus and they have Christmas trees and all that part's the same. But they always ask me a lot, what's it like with all the snow? They're all really curious because a lot of Brazilians, of course, have never seen snow. Only in the very southernmost state of Brazil, in Rio Grande do Sul, do they occasionally get some light snows, but nothing, like multi-inch blizzard or anything like that. So, I'll have the AC on for sure on Christmas Day.
Well, you'll have to bring a bunch of them up to Iowa in February and let them experience all the grandeur that is winter in the Midwest. Well, I appreciate you getting us updated on conditions and the weather outlooks and that sort of thing in South America. And I know with the holidays next week encompassing this time frame, I'll probably talk with you in a couple of weeks around the end of the year But in the meantime, I sure hope you and the family have a terrific Christmas. It's been great working with you this year. And thanks for everything. We wish you all the best.
Yeah, you too, Marlon. Merry Christmas.
All righty. Thanks a bunch. Matthew Crew is the president of Comstock Investments with us direct from Brazil here on a Tuesday. That'll do it for this episode. For Brianne Jenkins, I'm Marlon Bowling. We'll catch you next time right here on the Comstock channel. Futures trading involves risk. The risk of loss in trading futures and or options is substantial, and each investor and or trader must consider whether this is a suitable investment. Past performance is not indicative of future results.